finviz.com. That's the little screener we use. So when we hop on Finviz, the first thing that we want to do is go to screener. Screener right here, third tab, 1, 2, 3, boom. Go to all. Once you go down, drop down to all. We want to look at large market caps plus. When you in it, we want to go large market caps, like I mentioned earlier. Large market caps, that's Google, Facebook, Amazon, DoorDash, P&G, whatever the case may be. Next, we want to go over to analysis recommendation, price above simple moving average, and then a relative strength index should be not overbought by 50. When you log in, these are the 5 ones you want to do. You can either put in your own country, you feel me? I'll be doing America, of course, because I know that stock market and those companies the best, obviously. What I'm gonna point out here specifically, right, is market caps, boom, are these charts. So what we looking for are weekly charts, because we want to purchase options on a weekly basis, you did? All right, so ideally, right, let's just look at Meta and break this shit down. So with Meta, we want it to stack like this, you feel me? So the 20, 50, 200. That's going to give us a clear indication that the stock is in an uptrend, obviously. So prime example, right? Looking past history, looking like when it was in an uptrend right here. Same thing like it was right here. 20, 50, 200 is stacked. When the 20 start dipping below the 50, you seen that it began to start crashing out and beginning on a very, very, very long downtrend, almost for about a year. So the entire year, Meta was trading down. It even got to the lowest of $100. So once it hit that bottom, I'm not looking at the chart far enough to see if it has support before 2021, but I'm sure if it did, since it bounced right here and went back up. So as it goes back up, right, you want it to start stacking again. The 200 has been consistent throughout this entire process, no matter how far it was. So this is not a good stock until this 2050 gets above this shit right here, gets above this 200. Because if it's trading below the 200, it has a high possibility of meeting resistance at the 200 simple moving average and coming back down and rejecting. So ideally, if it was stacked right here, it never came down for the case that I'm trying to prove, but we will find one. All right, so Visa, this is perfect. This is one that we will want to use. This is a great buy. I'm actually in this trade right now for a contract, one contract for a month out. So, a month out. So if you're looking at this chart, right, it did the same thing Meta did. It got the stacked, it got the 20, 50, and the 200 simple moving averages. What we're looking for is it to be stacked in a clear indication of an uptrend. So we don't want these candlesticks to be bouncing off the 50 moving average, which is this orange line, and bouncing into this 20 simple moving average, which is this purple line. That's not a lot of movement and that's a lot of resistance. See, since it's already been trading between this 20 and 50 simple moving average for over basically what is this, 4 months? I guess it's like 4 months. It's been right in this range. So ideally, right, when it bounces off this 50 and it bottomed out at like 258 and it bounced right off the 50 and shot back up, it still has not engulfed the previous week's candle, meaning that it could still be in a downtrend. But being that it did bounce off this 50 simple moving average, it has a high possibility of continuing this trend, as we see here when it bounced off the 50 and it actually broke through the 20 simple moving average. Not saying that it's going to do the same thing that it did in the past, but being that this is what we used for our buy-ins, then we're going to buy. Why the hell not? Boom. So the 50 simple moving average is at 260. My contract that I got right now is, I bought a call option. I bought one call option for Visa at a 265 call, which is what it's at right now. And the Visa play that I'm in right now is already up. It's in profit, $143. And it doesn't expire until the 26th. So I got the contract for 2 weeks. I'm gonna actually roll the contract over for 2 more weeks, and I'm gonna hold it until August 2nd or August 9th. Just to make sure, like, okay, so prime example, why am I gonna hold it for 4 weeks, right? So if I hold it for 2 weeks, I'm in this 1 week, right? So the next week is basically, what if it has some pullback that next week? The following week, when the contract is expired, it might just pull back to this 265. You feel me? So if I'm in the contract, let's just take this right here, right? So this is the first bar. Prime example. We're gonna equate this bar, this candlestick right here, compared to this candlestick where our entry is. Bouncing off the 50 simple moving averages. And then this is week 1, boom, in profit. Week 2, in profit. Week 3, and then week 4, it hit its peak before it started resisting again. So you got to roll a contract over enough to give you enough time to make enough profit for you to be able to make the play. Like this contract cost me $434. So ideally, I would want to be able to make 50% to damn near 2 times my money. You feel me? So 50 to 200%. If I'm buying a contract for $434, ideally I want to make at least $700. On one contract, that's kind of a lot. So yeah, at least a 50% return on a 4 week play. That's not bad at all. 50% return 4 week play. It's not bad. If the analysis go good, that works. I'll take it. So that's Visa. Boom. So I just did that one live. We in Visa as we speak. So we're gonna go back to the chart. And then we're gonna show y'all another one that we in and how we picking out these plays. All right, chat. So here we go. Look, this is what I was talking about right here. So Meta and Visa, you see how the charts are identical. This is what we want. 20, 50, 200 stacked like that. Great buys. Boom. Now when we go down to Exxon, you see it's giving us the stack 20, 50, 200. But you see how close this is? The Exxon, how close it is bouncing off the 50 moving averages and running right into resistance of the 20 simple. That's because the separation isn't there as good. So we keep moving. That's not what we want. But MasterCard on the other end is doing very, very well. Good gaps, stacked up, bouncing off the 50, bounced off the 50 previously before. Boom, goodbye. How much is it? $440 a contract. So the contract's probably gonna be like $800. I ain't got it right now. Keep it moving. Costco, cool. All right, so this one is good. Only thing about these drug manufacturing companies, though, they are very, 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 very volatile. Unless prime example, it was like Lilly, right? The one that Lilly fight like the Pfizer or Johnson Johnson, where it's like a great pandemic. Of course, they're gonna skyrocket. It's a great time to buy companies like that. This one right here, Thermo Fisher, I like that one. I like it a lot. Like I said, the medical companies, they could be a little iffy sometimes. Wells Fargo is good. Wells Fargo looks clean. Thing is with Wells Fargo is that it's right in the middle of that 20 and that 50. So we'll give it a couple weeks. We're going to put that one on the stock list, though. We're going to put Wells Fargo on the list. Because once it start hitting that 50, once it hit off that 50, boop, boop, it's going to the top. And we want to be right in that trade. You feel me? So that's giving us a good like 5-6 points where it can pull back. And that's going to basically give us a good like 10-15 points for it to shoot past its previous all-time high of what, like 63 that looked like 63.50 or some shit like that. That looked cool. That looked like a clean one. DHR, man, that chart all over the place. Medical company, cool. G even rolling. Medical again. Chipotle, we're going to keep our eye on Chipotle, same as Wells Fargo. Because like I said, it just broke out that 20 simple moving averages. Look like it's heading to the 50, but it's still stacked. The 20, the 50, and the 200 is still stacked. So it's not going, the 20 ain't going to cross over the 50, and the 50 ain't going to cross over the 200. If it do, that means the stock is going all the way down to the ground. Way lower than what it is. Damn near go to $40. If it dropped down to the if the 20 cross over the 50, it's going to like $35, $40, something like that. But if it bounce, boom, if it just go down to the 50 at resistance, as support, then it's good money. It's going to bounce back up. So Chipotle is a good one we look at. Boom. I like that one. I like Chipotle. I like Wells Fargo. So we just put them on the list, you feel me? We just keep them looking. We already in Visa, so we'll just wait on that. We'll wait on the Visa. We in Visa. We're going to roll that one over to the 9th. By the time that one cash in, we should be able to hop in Wells Fargo and Chipotle. Them pretty should be good buys. Those should be good boys. All right, bet. TDG looks clean, but that stock is $1,242. So I'm not going to be able to afford that. But PSX. I'm in that one. You dig? Check me out, chat. Check me out, though. Check me out, man. We in that PSX, right? And we in that one hard. We in that one tough money. We are in a lot of positions. I'm not going to hold y'all. My stock, it looks a little risky. But it's calculated. It's calculated risk. You feel me? They say be versatile diversify when you trade and investing. Bow, we did it. We did it. So we in the Visa, right? We in the Visa right there. Then we in the PSX, we in the Phillies right there. Both of them is already in the money because we are using the system that we have designed. We ain't gonna win them all. We gonna lose some, we gonna win some. But the thing is, when you got a good, all right, so my strategy is this. Every Friday I'm doing my watch list, nigga, at 11:30 Pacific time. Doing my watch list. I'm gonna do it an hour and a half. And 5 minutes before the market closed, I'm buying every contract and company that I had on that list every week for the next next 12 weeks. So basically the next 90 days. And we finna try to run it up. We gonna show you right now. The account right now is at 5,800. 5,800. Boom. Let me see if y'all can see me. Let me make sure. Bet. 5,800. These are our current plays, and what we in right now. We in a lot of them, but a lot of these don't even expire for a minute though. 7 of these plays don't even expire until the 2nd. So we good money, bruh. Like we are real good money, bruh. So we got Chipotle, we got Wells Fargo on top of these. Like I was just showing y'all that PSX, the PSX, right? Boom. The PSX is in the money. I got a PSX 135 call, right? PSX is now at 138. Boom. It's right there. No bappy. We're going to take this account, bro. All we're going to do is just, so the thing is that what we're going to do is every time we get a list, I don't care if the list is 10 stocks long, 11 stocks long, I'm buying every single one of them. I'm buying every one of them. With 5 racks, I want to see how fast, or not even how fast, how diligently I can trade, how much I can keep my system in order, and how consistently I can print money off this stock market based off the rules and everything that I've been taught, shown, and learned on my own. So yeah, those are 4 plays right there. 2 of them I'm already in. 2 of them we're gonna keep on the watch list, and from there we basically just gonna ball out, nigga. Kashlight, deuces.